First section of finance now for Unit 1, and it's all about key financial terminology, revenue, costs, and working out profits as well. So we need to understand these key terms. We need to understand how changes in these key terms can affect profits. We need to be able to calculate profit, and we need to look at when things change, usually percentage changes. But we'll have a look at some examples of those. So first key term, revenue, and this is the income earned by businesses by selling goods and services. Other words, just to confuse you a little bit more, can be used to indicate revenue. Sales revenue or turnover have been used in the past. And to work out revenue, we just do the price times the quantity sold. So if we've got an example here of a product that's selling for £5 and we sell 10,000 of them, we're going to earn £50,000 of revenue. Okay, costs is basically just the money that's needed to create the goods and services. So everything that goes into creating the goods and services will have a certain cost attached to it. So some examples would be rent for your premises or facilities, your wages, your materials, your electricity bills. There are loads of other costs, but I'm just putting down a few examples there for you. So if we assume, or if we make up this example of where rent's £2,000, wages £20,000, materials 15, and electricity £5,000, then if you add all of that together, and if I've got my maths right, it is £42,000 worth of total costs. So revenue is usually a multiplication calculation where you're timesing the price times the quantity sold, whereas working out your total cost is usually just adding up. But sometimes some of these things here, wages, materials, might be expressed as per unit. So then you might have to, if wages are £2 per unit, meaning that it costs £2 worth of labour to make each unit of output, or whatever it is, each good that you're producing. And if you produce 10 of them, you'd have to do 10 times 2 to work out the total cost of labour for producing 10, which would be £20. So occasionally it is set out like that in the exam. Profit is just the revenue minus your cost, so it's the reward that you have left over. But if your costs are larger than your revenue, it's going to work out as a loss. So if we take those two examples there, £50,000 minus £42,000 will give us £8,000 profit for that business. Now sometimes we have to adapt our calculations by certain percentages. So I'll just go through a few common percentages that you might have to adapt your figures by. So say we have to find a percentage of a certain amount, so 30% of £50. I would do it, and I know there are a lot of different ways that people do it. I would do it £50 times the percentage as a decimal, so 0.3 equals £15, so 30% of £50 is £15. If we had to increase £50 by 30%, now some students would have worked it out there and then they'd just add the £15 on, but I would do it by decimals again. I'd do £50 times 1.3%, because 1.3 in decimals, because what's that saying is I want to take 100% of what the figure is and then add on 30% there, so that would be 65, and it's a bit quicker with your calculator. If we needed to decrease £50 by 30%, some students would work out the 30% and then just minus it from the £50. That's absolutely fine, it'll give you the same answer. But I would do it again with decimals, and if we take away 30% from something, we're left with 70%. So 70% as decimals is 0.7, so 50 times 0.7 will give us 35. Okay, and then lastly, looking at percentage changes. Now, the way that I do this is change over the original number. So this number going from £50 to £65 has changed by £15, and the original number is that £50. So 15 divided by £50 will give 0.3. That's in decimals. That as a percentage is actually 30%. And if we were look at it going the other way, it's gone from £50 to £35, so that's a £15 change, and the original was £50. So it's actually just the same equation. 15 divided by 50 will give 0.3 or 30%. So if you can understand those percentage changes, I think that's the level of maths really that's needed for these types of calculations. So going back to our previous example of the price, £5 times the quantity, which was 10,000, giving us £50,000 worth of revenue. Sometimes we might have questions that look at if price was increased by 10% and the sales dropped by 5% as a result, what would the revenue be? So if we increase the price by 5%, if we increase the price by 10%, we've got £5 times 1.1, which gives us £5.50. So we're increasing it by 10%, but adding that onto the 100% there. That's why it's 1.1. And if we decrease the sales volume by 5%, we know we're going to have 0.95 left, 95% left. So that's going to give us 9,500. Then if we take these numbers, the 5.5 times by 9,500, we will get a new revenue figure of £52,250. Now that is actually a lot more revenue than previously with the 50,000. So it seems like a good strategy for them to increase the price by 10%. However, had sales fallen by a larger percentage than 10%, we'd have actually seen a reduction in the revenue. So sometimes, I mean, that's what economics is, actually, if you're interested in that. And this section, we call it elasticity. But for GCSE business studies, sometimes you just have to put the figures in and calculate it and see if it's a good move or not such a good move, as in a bad move. Okay, and this is something really key to remember as well. I always think of profit as two-sided. There's two sides to profit, just like there are to a coin. So part of increasing profit is you either have to increase revenue or you have to decrease costs. So lots of students often, if I say to them, how would you increase profit? You say, well, you need to make more revenue, and they forget about this cost part. But sometimes actually decreasing costs might be a simpler thing to do than increasing revenue. So don't forget about the two parts of profit. It's made up of both revenue and of costs.